Okay, so let's start with the newly inserted part in your offenses and penalties chapter. Offenses and penalties and ethical aspects under GST. So we are now starting with the ethics under GST. Now, normal meaning of ethics is what? You have it in your audit also, professional ethics, etc. Normal meaning is how a particular activity should be legally done. Okay, so here they are telling moral principle, how it should be morally done. Moral principle that governs a person's behavior or how an activity is conducted. So ethics basically lays down that principle where we can distinguish this is correct, this is wrong. Okay, like if something is going wrong, then we say, na, this is ethically not correct. Okay, or we say that this is ethically correct. So that is there. Now in your audit also, in your along with your audit also, you must have studied about ethics, where they tell a chartered accountant should not do this, okay, or a chartered accountant should do this, etc. Right? Now similarly, they have tried to introduce this ethics in your GST also. Now they are telling that a CA plays important role in various fields. Okay, when we talk about income tax, yes. When we talk about GST, yes. When we talk about auditing, yes, etc. Right? Now in case of GST also, can we say a CA plays a very crucial role? Okay. Now let's say there is a particular taxpayer who had the intention of tax evasion. Who had the intention of tax evasion. Okay, whenever, let's say, if that person is getting his returns filed through a chartered accountant, or whenever that person is getting his books audited through a chartered accountant, that chartered accountant should ethically not allow the said taxpayer to enter into such transactions. Okay, example, now we have been studying about bogus bills, bogus invoices, etc. So these unethical practices, these are happening in India. Okay, issuance of unethical bogus invoices, and then taking of credit on the basis of that invoices, and then using it for payment of the further tax liability. Now this is creating a red flag. It is a red flag for the government. Okay, because the government is losing out the revenues, right? So they are telling these are some unethical practices which are happening under GST. For that, we need the help of chartered accountants. Okay, now chartered accountants anyway, whatever professional behavior is expected out of them, that is anyway given in the code of ethics, which is laid down by the ICAI. Okay, and then they have also told in the CA Act, they have also told that if someone is found guilty of this professional or other misconduct, okay, I am not getting into detail of that because that you know it better than me, then in that case disciplinary action will be taken against such person. This is there. Okay, for that they have prescribed that that person will be guilty under clause 7 of part 1 of the second schedule, and he can also be deemed guilty under clause 8 of part 1 of the second schedule if he is involved in any such sorts of professional misconduct. Okay, now they are telling that while auditing, yes, you are following professional ethics, well and good. Now while discharging your duties under GST law also, that is maybe compliance, that is filing of returns, or while helping them to get themselves registered, at such times also, please make sure that you comply with ethics. Okay, that you adhere to the code of ethics. Please maintain that professional knowledge, professional skills, and all those things while dealing with your clients in respect of the GST matters. If you do not do that, okay, if you do not do, or if you help the client to prepare bogus bill, or if you retain some benefit out of that, then in that case even that CA will be liable to penalty and prosecution. Are you clear with this? Yes. So here, one more thing which I want to tell you so that we can relate it to the part that we are going to do ahead. In many sections before, okay, while doing ITC chapter specifically, and then while doing audits, okay, we had studied one or two places, we had studied at a few places that audit chartered accountant certificate is required. Okay, in ITC I very well remember we had done a table when that person was, he was taking his first time registration, or from composition he was coming into normal scheme, etc. And when the tax liability, when the amount was exceeding a particular limit, at that time he had to take some certificate from the chartered accountant. And similarly, at the time of merger, amalgamation, takeover, etc., CA certificate was required. Okay, then do you recollect that special audit which was done by cost accountant and chartered accountant who were appointed by the commissioner? Okay, at that time also there was an involvement of the CA coming up. So they are telling, and one more chapter that we are going to do after that is in refunds. In refunds also there is going to be a place where we require the certificates of the chartered accountant. Okay, so they are telling that wherever this chartered accountant is getting involved, okay, and whenever he has to do some certifications or whenever he has to give some reports, this should be done by the CA in a proper manner. Okay, means it should not be unethical, it should be done in a ethical manner. Okay, now see what are they telling us here. First of all, first thing that they are telling us here is certification of the amount of ITC claimed at the time of registration or at the time of voluntary registration or switching to regular tax paying status or coming into tax paying status. Okay, I had told you that this we had studied in the ITC chapter. So in this case, the registered person had to make a declaration in form ITC01 on the GST portal that on that particular day, these were the inputs or these were the stocks with them, and whatever is the tax paid on these inputs, for that he becomes eligible for claiming the ITC. And if the claim of ITC, total claim of ITC, if that exceeds 2 lakh, then that declaration needs to be certified by a practicing chartered accountant or by a cost accountant. So this we have already studied. Okay, left hand side whatever is there, this is nothing new. So whatever whatever the CA is supposed to do here, see what are they telling? A CA is required to examine the books of accounts and other relevant documents and records of the taxpayer and to provide, see this, and to provide a reasonable assurance that the amounts declared, whatever amount of ITC that person is willing to claim if exceeding more than 2 lakhs, have been accurately drawn from the books of accounts and other relevant documents or records of the taxpayer and is claimed as ITC. Because the department is relying, can we say the GST department is relying on the certificate or the declaration which was signed by the CA. So the department is relying on that particular CA's declaration. So CA should CA should do it properly and it should provide a reasonable assurance that this is proper. Okay. Similarly, in ITC chapter itself, we had studied that in case of sale, merger, demerger, amalgamation, lease, transfer of business, etc., etc. Okay. Now see what are they telling? In case of sale, merger and all these things, the ITC that remains unutilized in the electronic credit ledger of the registered person can be transferred to the new entity, provided that there is a specific provision for transfer of liabilities in such change of constitution. In that case also, the registered person was required to furnish the details of change in constitution in form ITC 02 on the GST portal, and he was required to submit a CA certified certificate or a cost accountant certificate certifying that the change in constitution has been done with provision for transfer of liabilities also. So what is the CA supposed to do? CA is supposed to satisfy himself that everything is done properly, and he is required to provide a reasonable assurance that this transfer, whatever transfer of business is happening, that has been done with the provision of transfer of liabilities also. Yes. So basically this is nothing new that we are studying. They are just putting an extra push on that CA that please make sure that you are also checking it properly, otherwise you will also be liable ethically. Okay. Then next point, a certification that in case of a refund claim exceeding rupees 2 lakhs by the applicant, there is no unjust enrichment. Okay. So what are they telling us here? A certificate in annexure 2 of form GST RFD refund 01 is to be issued by a CA or a cost accountant to the effect that incidence of tax, interest or any other amount which we are claiming as refund, that tax incidence has not been passed to any other person. See, when will the government give you the refund? When that benefit has not been passed. Suppose if someone else has already taken the benefit and you are also claiming the refund, then that is a loss for the government. So a CA was required to give a certificate for that. So a certification of that CA should be based on examination of the books of accounts, okay, and thereby providing a reasonable assurance that this benefit has not been passed to any other person. So please give the refund to this particular registered person. Are you clear with this? Yes. Then the next one, certification of amount of ITC to be reversed or on cancellation of registration or switching to composition levy or exit from the tax paying status in respect of inputs for which tax invoices are not available. Now, whenever you are, your registration is getting cancelled, or whenever you are switching to composition levy, so now ITC will not be available. But whatever inputs were kept in your stock, okay, for that, whatever you had already taken the ITC, whatever stocks are kept with you, on that ITC you have already availed. Okay, so now that much amount of ITC you have to reverse back. Okay, if you want to reverse back, then you need the tax invoices. Let's say you have very old stock also kept with you for which the tax invoice is not available. So for that, if invoices are not available, ITC can be reversed on the basis of prevailing market price of such goods on the date of such switchover or cancellation, and the details so furnished on the basis of prevailing market value needs to be duly certified. Okay, because you are doing it on the basis of current market value, the quantity of goods, etc., needs to be certified by the CA. So the responsibility of CA has come into picture now. So CA should do a thorough examination of the books of accounts, etc., and should provide a reasonable assurance that whatever amount of ITC has been reversed on the basis of, for the invoices which are not available, on the basis of prevailing market value, this has been done properly. Are you clear with this? Yes. And then the last one, that is audit report under section 66. Under section 66, which I had already told you, the commissioner, okay, the proper officer not below the rank of assistant commissioner, depending upon the nature and complexity of that particular case and in the interest of revenue, if it was of the opinion that, value was not declared correctly or the credit availed is not within the limits, then he was taking the approval of the commissioner, and then he was appointing a chartered accountant or a cost accountant to do a special audit, and it was giving a direction to this cost accountant or the chartered accountant to go and do this special audit. But yes, definitely he will be appointed by this person, by the department only, and the remuneration to that chartered accountant or cost accountant will also be paid by the department only. So now the department is going to rely on whose audit report? The department is going to rely on the audit report given by this chartered accountant or cost accountant. So who should be unbiased now? Can we say this chartered accountant? Now we are not going to say here about cost accountant, because we are studying from our ethics point of view, CA's ethics point of view. So a chartered accountant must approach the special audit with unbiased and impartial mindset, free from any external influences or conflicts of interest, etc. It should be free from all the personal biases, and it should do on the basis of references, on the basis of guidelines which have been provided by the department, and it should try that whatever findings are there, these findings are totally accurate, and if there are any conflicts of interest, etc., he should try to mitigate it, and with independence, etc., he should conduct this audit, which should be in the interest of revenue. Okay, and he should be totally unbiased. Are you clear with this? Yes. So these were the pointers that we have already studied. Okay, we have already studied. Now here they are telling that as per ethics also, you should do all these things properly. If you are not doing any of these things properly, then even you will be liable. Your client will be liable, that is separate. Even the chartered accountants will be liable. Are you clear with this? Okay, so this was basically about the ethics that they are talking about under GST. Are you clear till here? Yes. And now to support these things, they have framed a few 4 case studies they have framed here. Okay, 4 case studies they have framed here, and in these case studies, you will understand, okay, how the transactions have been framed, what is the role of the chartered accountant, what punishment can come on the chartered accountant, and all those things. Are you clear till here? Yes. Okay. So now let's start with these case studies. These are really very, very nice case studies. You will enjoy doing it. Okay. And you will also come to know how the transactions are being framed. Now see what are they telling us here. Okay, first thing that they are telling us here is that CA, who is, if at all, if there is any particular chartered accountant who is, involved in doing any wrongful things along with his client, then under GST that CA will be liable. Okay, plus if that particular person is a CA in practice, he will be deemed to be guilty of professional misconduct, and under both the clauses, clause 7 and clause 8, that person will be liable. Yes. Okay, let's start with the case studies, everyone. First case study, facts of the case. Messrs. L and Company, a partnership firm. Okay, first case study. L and Company, a partnership firm with two partners, Mr. X and Y, is registered under GST in Kolkata, West Bengal. It is engaged in supplying the materials used for construction related activity. Mr. X and Y are friends, and each of them also have their own separate sole proprietorship firms engaged in supplying construction material. Okay. So they are partners also. They are partners also in L and Company, and plus they are friends also. Plus they have their own proprietorship firms also, and these firms are also registered under GST. Now, Mr. A is the tax consultant, and he is not a CA of Messrs. L and Company. Okay. Now, Mr. X gets an offer from gets an offer from the customer, Messrs. W Private Limited, called as WPL, to issue some supply related bills to meet the budget allocated to WPL by their management in relation to civil works. Okay. Mr. X shall earn a commission of 20%. 20% of the value of supply charged in the supply bills accepted by WPL. Okay. So we need to give bills to WPL because Mr. X has got this offer. So he is going to get a commission of 20%. Now, Mr. X agrees to share 50% of his earnings with the other partner, that is Mr. Y, for undertaking the above project. Now, Messrs. L and Company need a bank loan for expanding its business operation, and supply bills issued to WPL will inflate the turnover. So it needs to show more turnover. So now L and Company is going to issue the supply bills to WPL. Mr. X and Y sought advice from the tax consultant Mr. A as to how to execute the above project. Okay. Now, based on the guidance provided by Mr. A, it is executed as follows. Now, see here. Messrs. L and Company shall issue supply related bills for steel, jellystone and cement for 280 lakhs to Mr. X, wherein the delivery site shall be of WPL. Wow. Okay. So basically L and Company is going to issue it to Mr. X, wherein Mr. X is going to then supply it to WPL. Okay, and they are doing it under bill to ship to model. So basically this is going to be the invoice chain, but L and Company is going to directly deliver it to WPL. Okay. Now, Mr. X shall avail and utilize the ITC on the bill of 280 lakhs. Okay, because it is a purchase, and shall separately enter into a contract with WPL, that is this one, second one, for supply of all these things to be used for construction of foundation of plant and machinery for 280 lakhs. Further, Mr. X in his individual capacity shall issue labor related bill for 40 lakhs for assembly and erection work undertaken at the site of WPL without actually providing a service. Okay, so basically first L and Company is going to sell it to Mr. X, means not doing actual supply but issuing the invoice. Then Mr. X is going to further supply it to WPL. It is going to do a supply of 280 lakhs of goods and 40 lakhs of services also. Here it is only 280 lakhs, and from Mr. X to WPL it will be 280 lakhs for goods and 40 lakhs for labor. Wow. WPL, now it has got an purchase invoice. It will avail and utilize the ITC on the bills of 280 lakhs and 40 lakhs. Okay. Now all inventory registers, they have updated it properly, and there was no actual movement of goods. So all bogus invoices have been issued. Okay. Mr. A assures Mr. X and Y that inventory registers, I have kept it properly, don't worry about that. Compliances relating to e-way bill have been taken care of, God knows how. Money shall be duly realized as per the bill issue. So whoever is supplying to whom, okay, like let's say L and Company is supplying to X, so X will do the payment to L and Company. X is supplying to WPL, so WPL will do the payment to Mr. X. They have done all the bank transactions also. Now, Mr. X approached his friend, Mr. P, a practicing chartered accountant, for seeking his help in the above arrangement. However, Mr. P makes Mr. X conversant with the following GST implications that may arise in the above arrangement. So, it is basically telling it to Mr. X that boss, so and so GST implications will come on you if you indulge in such transactions. Are you clear till here with the case study, at least what has happened here, everyone? Yes? Okay, so let's go ahead and let's understand the GST implication in this particular case. Yes? Okay. Now, first of all, issue of invoice by L and Company to Mr. X. Can you see this first one? If you want, I'll highlight it. L and Company to Mr. X, the first one. Now, in this case, is there any actual supply? There is no actual supply. Okay, if there is no actual supply, then can we say this is not a supply as per section number 7? Okay, because it does not satisfy the criteria of supply. If there is no supply, then can we say there is no tax liability also? If there is no tax liability, means there is nothing called as tax not paid or tax short paid. Okay, that means section 73-74 cannot be invoked here. Okay, this we had done in the circular also previously. Okay, now in this case, if 73-74 is not there, but 122 and 132 can at least come into picture. Now, can we say here, thinking from L and Company, okay, L to Mr. X, L and Company to Mr. X. Now here, can we say L and Company will be liable for issuing bogus invoices, okay, liable for penalty as well as punishment can come under section 132. Okay, so under 122, can we say it will be liable under section 122(1)(2), bogus second one. Okay, and this will also be liable under section 132(1), clause B. Are you clear with this? Okay, that is the first thing that is going to come on L and Company. Now, can we say Mr. X has given it, Mr. X has further given it to WPL. Okay, if Mr. X has further given it to WPL, again there was no actual supply. If there was no actual supply, means section 7 is not applicable. If section 7 is not applicable, means there is no tax liability arising here. If there is no tax liability, then again section 73-74 is not at all applicable here. But again Mr. X is liable. Okay, Mr. X will be liable for two sections here. First mistake that has been done by Mr. X is what? He has issued a bogus invoice. So he will be liable under section 122(1)(2). Secondly, Mr. X has fraudulently availed the ITC of the purchases from L and Company without actually receiving any supply. So it will be liable under 122(1)(7) also. Okay. Plus this is also an offense under section 132. So even that is applicable. Are you understanding this? Yes. Are you clear with this? Okay, now see. Now the next thing that they are telling us here is going back to the case study. Okay, think from WPL. See this thing which I am highlighting. Okay, everyone with me. WPL will avail and utilize the ITC on the bills of 280 lakhs and 40 lakhs used for underlying supply of goods. Means, can we say when we got it from WPL or when the WPL has got it, can we say WPL is further going to do actual supply? Okay, if it is going to do actual supply, means tax liability will arise. If tax liability will arise, then in that case, can we say WPL, whatever is the output tax, from that it will take the ITC of these purchases. And can we say that is fraudulent ITC which it has taken because there was no inward supply actually. So now can we say WPL will be liable under section number 74, fraudulent intention, because it has fraudulently availed the ITC and utilized it. If it has fraudulently taken ITC and utilized it in case of a further supply, so 74 will become applicable. If 74 becomes applicable, then no penalty under any other section can become applicable. Therefore, 122 is not applicable here. Okay, but can we say 132 can become applicable for fraudulently availing the ITC? Are you understanding this? Yes. And last, on Mr. A. Mr. A was the person who has helped to do all these transactions. Okay, this was mastermind was X and all those persons. They have already been held guilty. Okay, but Mr. A has helped. So can we say he will be liable under 122(3)? And suppose if he would have kept some commission aside, if he would have kept some commission aside, retained some benefit aside, then he will also be liable under 122(1)(a), mastermind. Yes, and suppose if Mr. P, chartered accountant, got involved here, then even he will be liable under 122(3). Are you understanding this? Yes, this was your entire case study. Please remember 122(1)(2), okay, bogus invoices, that is very, very important. 122(1)(7), which is talking about fraudulently availing the ITC without actually receiving any supply. Okay, then 132 is for offenses. Okay, and if there is a supply, okay, if there is a case of supply, and if you fall under any of those 5 cases, non-payment, short payment, erroneous refund, ITC wrongly availed, ITC wrongly utilized, okay, then in that case 73-74 will become applicable. And yes, whenever 73-74 becomes applicable, no other penalty can become applicable. Offenses can come, 132 can come, but no other penalty, that is no section of 122 can become applicable for that person. Are you clear till here? Chalo, theek hai. Now let's go ahead to the next part, everyone. Going ahead to the next case study, that is case study number 2. Let's start. Doodle LLC is an entity registered under Germany and is engaged in providing online services across multiple countries, including India. The service offerings include certain services which are covered within the purview of OIDR services liable to GST in India. Okay. Since Doodle LLC does not have any place of business, it will have to it appointed one of its employee, Mr. X, as its authorized representative. Mr. X is not a CA, very good, for all the purposes, because maybe Mr. X is going to do something wrong. So good that he is not a CA. For all the purposes in India, which includes undertaking GST compliances and also an authorized signatory for any other regulatory compliances here in India. Now, Mr. X, who is that authorized representative, is a partner in XYZ and Associates LLP. Post appointment of Mr. X, following chain of events unfolded. Oh my God. Now, Mr. X being an authorized representative of Doodle LLC, made an application for registration as an OIDR service provider in India and undertook other GST compliances. Okay. Subsequently, the Mr. X started filing the monthly GST returns and made payment of applicable GST in India on behalf of Doodle LLC. In lieu of such services, Mr. X was being remunerated a fixed sum on monthly basis as professional fee because he was acting as AR. The appointment of Mr. X was in his personal capacity and not in capacity of the firm. Means firm was not appointed as AR, he himself was appointed. However, for recovery of amount of monthly fixed remuneration from Doodle LLC, the invoices as export of services were issued by Mr. X in the name of his partnership firm. Oh my God. Okay, so basically Doodle LLC is there. Okay, Mr. X was appointed as its authorized representative. Mr. X was a partner in a firm called as XYZ and Associates. Okay, now can we say Mr. X is providing the service of being an authorized representative to Doodle? So Doodle will be making a monthly remuneration to Mr. X. But now what Mr. X has done is, because it wanted to take the remuneration from Doodle, what it did was it issued the invoice. Okay, XYZ and Associates issued the export of services invoice to Doodle as if it was exporting some service to Doodle and for which Doodle is required to make the payment. This is what they did. Okay. Now, the corresponding refund benefit was claimed by the partnership firm. So, XYZ and Associates exported the services to Doodle. Since it is a zero rated supply, it took the refund benefit for input tax credit against such export of services invoice. So, that refund benefit was available to XYZ and Associates. Now, Doodle LLC appointed influencers in India to promote its services. The tax invoices of such influencers were received by Mr. X in the name of XYZ and Associates. Oh my god. So Doodle Inc. is taking input, it is availing some services from India. And since Mr. X is managing everything, what it did was, whoever were those influencers, they gave the invoices in the name of XYZ and Associates. Okay. And ITC, since the invoice was in the name of XYZ and Associates, ITC was taken by that XYZ and Associates. Since ITC was utilized for further supply of this ITC was utilized for further supply. Okay. Means, can we say wrongly utilization of ITC has happened? However, actual service recipient was Doodle LLC, whereas they showed that actual service recipient is XYZ and Associates. Subsequently, Doodle LLC was required to furnish some affidavits and accounting records before the office of ED. Being an AR, Mr. X approached Mr. P, a chartered accountant, to prepare the affidavits and accounting records, which included critical financial information and data of Doodle LLC. He elaborated the entire arrangement among Doodle LLC, Mr. X and XYZ and Associates to Mr. P. Okay, so he showed, he made sure that everything looked very clear. He further requested Mr. P to certify and attest such records, which would be prepared and compiled by Mr. P in capacity of a practicing CA for submission before ED. Then Mr. P told that following are the GST implication of all your settings. Now see. Now, what was the first mistake? What was the first mistake that was done by Mr. X? What was the first mistake that was done? Okay. Now, in this case, can we say who gave the service to whom? X gave the service to Doodle LLC of authorized representative. Okay, but it was shown that XYZ and Associates exported some service to Doodle LLC. Okay, because it wanted to claim the refund. Now see, in such cases, can we say, first of all, this is a wrongful availment of refund, wrongful taking of refund. Yes. So see, what are they telling us here? Mr. X was appointed as AR and signatory in his personal capacity. However, the invoices were issued in the name of partnership firm. Further, such invoices were issued as export of service and corresponding refund was taken by the firm. Okay, now see, how is this punishable? First of all, can we say who actually gave the service to whom? X actually gave the service to Doodle. Can we say X gave the service to Doodle without any invoice? There was actual supply of services but no invoice. So can we say this is at least a supply? This is at least a supply, therefore tax liability will arise. If tax liability will arise, then can we say this Mr. X will be liable under section number 74? Because there is a non-payment of tax. Are you clear with this? Yes, he cannot say that X and XYZ and Associates is one and the same thing. These two are two different persons altogether. Are you clear with this? Okay, that is one thing. That is, this is supply made without any invoice. Okay, supply made without any invoice, tax not paid, therefore section 74 applicable. And if section 74 applicable, if section 74 applicable, 122 is not applicable. Are you clear till here? Okay, then the next one. Okay, next one. Can we say about who actually gave the invoice? XYZ and Associates gave the invoice to Doodle, but did it actually give any service to Doodle? No. So can we say invoice was issued, fake invoice was issued without supply. Now, since there is no supply, no section 7, so no 7374. If no 7374, can it come under 122? Yes, it can come under 122.12, that is fake invoices. Are you understanding this? And last mistake, that was of XYZ and Associates, that it took XYZ and Associates claimed incorrect refund. If it claimed incorrect refund without doing any supply, then in that case, can we say it will be punished, it will be liable for penalty under section 122. Okay, in 122, in the list, we can search which list comes for which offense. In those 21 offense list, which one is there for refund. See this, offenses relate, these were your 21 list now, which is there in our notes. So offenses related to refund, fraudulently obtains refund of tax, that is your clause number 8. Are you clear with this? So refund was obtained fraudulently, therefore liable under section 122(1)(8). Are you clear with this? Plus, can we say anyway 132 will anyway be applicable if you fall under those clauses? Yes, that was the first mistake. Another mistake, what happened secondly? Okay, so Doodle LLC had appointed some influencers here in India. Influencers gave the service, influencers provided the service to Doodle LLC. But what they did was, they took the invoices in whose name? They took the invoices in the name of, instead of giving the invoices in the name of Doodle LLC, influencers. Actually, they were providing the service to Doodle LLC. Okay, but they took the invoices from influencers in the name of XYZ and Associates. So, and consequently what happened was XYZ and Associates took the ITC of the same. Now, what is the mistake of XYZ and Associates? Can we say it fraudulently availed the ITC? It fraudulently availed the ITC without actually receiving any input service. Influencers never gave any service to XYZ and Associates. So, and XYZ and Associates is going to use it for further supply. Means, can we say for further supply, its tax liability will reduce because it will take this ITC. So, can we say this is wrongful availment of ITC? So, can we say this will be liable under section number 74 under those 5 cases? If section 74 is coming, then 122 will not come. But 132 can anyway come. Are you understanding this? Yes. And what about Mr. A? What about Mr. A? Now, suppose if he is taking some benefit out of it, he will be liable under 122(1)(a). If he is helping, he will also be liable under 122(3). Plus, he will also be liable under 132. Are you clear with this? Yes. And if CA also get himself involved in this, he will also be liable, plus professional misconduct will be considered. Are you able to understand this? Yes. Take one by one transaction, it will become very, very simple. Sure. Let's go to the next one. Case study number 3. Facts of the case. ABC and Associates LLP, ABC, a firm of CA, was empaneled with the Commissioner of GST for appointment as special auditor under section 66. X Limited, a registered person under GST, was selected by Office of Commissioner for special audit. Okay, so basically X Limited is that company whose special audit is going to be done by this ABC. ABC because it was nominated for this particular case. Now see what are they telling. The appointment of special auditor was based on the undertaking furnished by the firm that partners of the firm or any of the relatives are not directly or indirectly related to the auditee. Means they are not related to X Limited. However, while submitting the declaration, if ABC fails to disclose, it failed to disclose that spouse of one of the partners of ABC is working under full-time employment in the head of tax department of the auditee, that is X Limited. So basically the auditor and the auditee, one of the persons in them is related. What will be the implication if the CA is not making the full disclosure? That is one thing. Second one, material discrepancies in the valuation of stock transfer to related parties by the auditee were noticed by the firm. If ABC fails to disclose this in the audit report, material discrepancy in the audit report, what will be the implication? Means CA is not doing this properly. Then the input tax credit claimed by X Limited, that is the auditee under GST ITC 01, was certified by one of the associates of the CA firm in favor of X Limited, in favor of the client. Such certificate was based on incorrect facts and against the eligibility criteria as per section 18. Oh my god. However, if ABC fails to exercise due diligence and certificate is taken on record by ABC as an audit procedure and is relied upon at the time of finalization, what will be the implication? And last, ABC receives a consideration of 5 lakhs from X Limited in the ABC receives a consideration of 5 lakhs from X Limited. ABC cannot take the consideration from X Limited now, because this is a case of special audit. Consideration will be paid by the department, and it took that money from X Limited in the name of special audit conducted. Problem and only problem. Now what is going to happen in all these cases? So first problem that happened here was false undertaking was submitted by that auditor, that and there is no related persons and all those things. So can we say this is a problem? Yes. And this will lead to false undertaking because they have not disclosed it. This will lead to false undertaking. And further, a question may be raised about independence of the audit team, means department can raise a question. Okay, now for point number 2 and 3, what was point number 2 and point number 3? First of all, material discrepancies in stock transfer was problem, and second one, input tax credit certification went wrong. Now in this case, if they are purposely doing it in favor of the client, means they are basically helping the client. If they are helping the client, then can we say penalty under section 122(3) will be applicable there in both the cases individually, right? And the last one, receiving the consideration. Now we have already studied that this is a problem because consideration, audit fees in case of special audit is paid by the department and not by the auditee. Okay, so here the CA is liable, definitely the CA is liable, and since this is nowhere covered specifically, so can we say general penalty up to 25,000 will be applicable? Yes. And the last one, okay, case study number 4. So case study 3 was actually very simple because it did not have multiple transactions, multiple links, etc., just like we had it in case study 1 and 2. Chalo, anyway, let's study case study number 4. What is this case study talking about? So this talks about the facts of the case. See what are they telling us here. A Limited is engaged in the business of manufacturing cotton yarn, wherein cotton is the principal raw material in the manufacturing process. The price of cotton varies depending upon market condition and is dependent on various external factors. Mr. X is a tax consultant. Mr. X advises A Limited on GST compliances and he is not a CA. Okay. In order to meet the expansion related expenditure, A Limited sought a term loan and working capital loan from the bank. As per the bank, the turnover and profitability of A Limited were not meeting the benchmark. Okay, so again they are going to do the same thing. They are going to increase their turnover and profitability. Accordingly, following actions were undertaken by Mr. X, being the tax consultant of this company. A separate entity, that is B Limited, was incorporated and directors of A Limited were appointed as directors in B Limited. Okay, so main company was A Limited. Now they are incorporating one more company called as B Limited. Directors in that same company, both the companies have same directors, so that the control is there with the directors of A Limited only. Further, B Limited obtained GST registration as a manufacturer of yarn, wherein Mr. X assisted B Limited in obtaining such GST registration on the basis of fake documents. My God, fake registration. Now, subsequently, A Limited started issuing tax invoices for supply of yarn to B Limited. However, there was no actual movement of goods. So, no actual supply, fake invoices only. A Limited gave it to B Limited. Okay. Now, the tax invoices were issued and the same were reported in the GST returns by A Limited. Further, B Limited, because of this, what happened, A Limited's turnover increased and it was able to get the bank loan. Okay. Now, further, B Limited availed the ITC of all such invoices reported by A Limited. So, B Limited took the ITC of the same. The finished goods related to such tax invoices were sold in the local market by A Limited in cash. A Limited anyway had the stock. Okay, it did not actually supply anything to B Limited. That was totally a fake invoice. So, A Limited basically sold it in market in cash. Therefore, there was no GST invoice also and there was no GST liability also. Very good. Now, B Limited issued tax invoices for provision of certain invoices to A Limited. Oh my God. B Limited is issuing some tax invoices to A Limited, showing as if B Limited is providing some services to A Limited in form of testing and all these things of machinery installed at A Limited's premises apart from other services. However, there was actually no services provided by B to A. And the ITC appearing in the books of B Limited, okay, which was a fake ITC taken from A, was utilized by B Limited at the time of discharging. My God, see this, B Limited showed as if it is providing service to A Limited, means it is an outward supply for B Limited. On that, tax will be payable. It utilized this ITC to pay that tax liability. So ultimately, that ITC benefit which we took from A Limited, that is again passed on to A Limited only. Okay. Now further, B Limited issued tax invoices for sale of yarn allegedly purchased from A Limited to other group entities to ensure that stock of yarn became zero in the books of accounts at the year end. The tax invoices were issued at a rate lowered by 90%, of the actual tax invoice received from A Limited, contending that quality of yarn had deteriorated. Oh my God. So if it received stock of 100 rupees, now it is selling only at only 10 rupees. It is saying that balance 90% value has reduced because the quality got deteriorated. Nonsense. Okay. Now, Mr. X was aware of the aforesaid actions of A Limited and B Limited. Further, the GST returns were filed by Mr. X for both the companies. And then Mr. A Limited approached PCA to issue relevant certificates to the bank certifying the turnover as genuine turnover. Now, Mr. P, that is the CA, told A Limited about the following GST implications. Very good. You should be able to answer this, everyone. Yes? Okay. Now, first A gave the invoices to B. Okay. B gave the service invoices to A. Let's understand what will be the GST implications. Okay. Achha, before that, can we say B Limited's registration was obtained on fraudulent basis? Let's go to section 122. Which clause? Offenses relating to registration. Offenses relating to registration. Yes, here it is. Offenses related to registration. So he furnishes any false information. So he is liable under clause 12. 122, 112, that person will be liable, everyone. Where is it? Hmm. 122, 112, B Limited will be liable for that. Okay, that is one thing. Now, for the invoices, who gave the fake invoices to whom? Can we say, first of all, A Limited gave it to B? Okay. Then B Limited gave it to A Limited for services. Okay. And then can we say B Limited gave it to other group entities? Even that was a fake invoice only. There was no supply of goods at all. If there was no supply of goods, nowhere section 73 and 74 can come into picture. Okay, then we have to levy the penalty under section 122 only. Okay, fake invoices, bogus invoices, 122(1)(2) penalty will be applicable. Plus 132 offenses will also be applicable here. Are you clear till here? Okay, then next, after that, who took fraudulent ITC? Fraudulent ITC was availed by whom? Can we say here, B Limited took fraudulent ITC? Remember, A gave it to B. Okay, B took ITC of that. B availed the ITC of that. Then B Limited made supply of services to A Limited for discharging that tax liability. It availed that ITC, fraudulently availing the ITC, but actually there was no supply. So can we say here 122(1)(7) will become applicable? Why 122(1)(7) will become applicable? Because of, why 73-74 is not becoming applicable? 73-74 is not becoming applicable because there is no supply. Okay, but 122(1)(7) will become applicable because it has fraudulently availed the ITC. Are you clear with this? And 132 is anyway becoming applicable. And next one, it furnished that tax consultant was filing, that company was filing through its tax consultant fake GST returns. It falsified the books of accounts and increased the turnover, etc. For faking the books of accounts, again penalty under section 122(1) needs to be checked. Okay, let's go and check which offense under 122(1) will become applicable, which clause number will become applicable. Let's see. Offenses relating to records, books, documents, etc. Falsifies or substitute financial records, fake accounts, documents, yes, to evade the tax. So can we say clause 10 will become applicable there? Yes. So 122, 110, 122, 110 plus your 132 is anyway going to become applicable there, right? Then this Mr. X, Mr. who is helping, 122, 3 will become applicable on him. And if CA also helps, even CA will be liable for all these things. Are you understanding this? Are you clear with this? Yes, so one by one offense. Okay, first always check if there is a supply or not. If there is no supply, forget about 73, 74. Start searching for the penalty under section 122. Are you clear with this? Yes, so this was all about your ethical aspects under GST, which was newly introduced. Actually, there was nothing much into it, and they introduced 4 case studies, which we have taken it separately. Yes, done.